with software comes hardware. And so when I say hardware, what I really mean is pretty much the laptop that you will use to do your work on a daily basis. And this one comes up a lot as well with the customers that we work with. And normally the question is around purchasing versus leasing. And especially if you're scaling, and you've got, the next year you've got 15 hires, that's a lot of money to spend on the latest Mac or Windows machine that you've got. So the question is, what financial and operational factors influence whether or not you buy or you lease? And Michelle, I'm going to come to you because you look like you've got the answer already.
Well, no, I at the end of the day, it's I'm sure Stephen will agree. It really depends on where companies are in their life cycle and cash. It boils down to cash and appetite for debt. It always does. So most startups, small companies need to preserve their cash and don't want to be using their hard-earned working capital to purchase machines outright that have such a short life. But having said that, sometimes it's not a choice because obviously leasing can be more expensive. It's over time. You may have a combination of both where you have to take out a loan. Sometimes that's not available to smaller companies to be able to fund that. So, I mean, it really does depend on the company, the amount of cash or investment they have in the business. I've had all different scenarios where I would always try to preserve the cash. So whatever solution is going to not have a massive initial cash outlay is really important. Because at the end of the day, there's some really good leasing deals out there now, and it can be just much better for insurance purposes, for repairs and maintenance, for replacement, things like that. I obviously know what my preference is, but I think sometimes when you're having those conversations with company leaders, it's difficult because some of them are, they come from the sort of background of no, I like to buy and own my own, and it's tricky, and you do have to try and sort of, as I say again, it's that scoping and selling them this is why this is important, this is the impact it's going to have on our growth from a cash perspective. And this is why this deal looks better than just going out there and buying 15 laptops.
Yeah, I think there are lots of different leasing options out there, and it certainly gives the startup the flexibility, wherever, buying a laptop outright and depreciating over a course of, I don't know, we often see it's normally about 3 years, but I guess anything can happen in that time. But I have seen personally with leasing options, they are quite expensive and there is quite the markup on having the privilege of leasing and potentially handing back however frequently you want to upgrade. I mean, Stephen, what are your thoughts on this?
Yeah, I tend to agree with Michelle, actually, in terms of, like, in these types of business, cash burn is your key thing. How can you ensure your cash runway goes as far as possible? And if leasing does not feel expensive, I think that's the best way to go. I think the two factors you need to consider is how many laptops you need to buy in a year. Some businesses are very more employee heavy than others. So when it's less employee heavy, then buying outright can also just be the quickest, smartest decision. But also the location of staff. The companies are typically not in one location. So in my previous companies, we've had people in multiple countries, and how do you get computers out to them? And therefore, your only option may be to buy them. But the interesting debate also is, Macs versus Windows computers, and and that also has an influence on the overall laptop strategy of a company. But my overarching view is that leasing is better when you want to preserve your cash run.